Good morning, everybody. I wanted to reach out really quick to you today, and I don't normally do these via video. However, in this instance, this new tax credit came out in September, and we'd have to do some things before the end of the year to make it beneficial. And so this is a little bit of a generic video that may not apply 100% to you, but you are getting sent this video because we think it could help you with your tax situation. So in 2017, they passed the Tax Cuts and Jobs Act. Part of that increased the standard deduction and made it so most of us don't itemize anymore. Another piece of that for those of us who could itemize is they limited the state tax deduction. So that's state withholding on our W-2s. It's taxes paid from the previous year. It's real estate taxes. It is property taxes, all combined together right now is limited to $10,000. So that further limits who can itemize their deductions. So in September, Nebraska passed a new law that is passed through entity tax. And so here's an example. Money Smarts could elect, so we have to make an election every year. Money Smarts could elect to pay my Nebraska taxes. And so by doing this election, I make the payment. If I make that payment now for 2023 before the end of the year, I can use that as a federal tax deduction. And so if Money Smarts, let's say, owes $5,000 in tax, I estimate, I'm going to pay in that $5,000. It gets deducted on my federal return. Okay. If my tax rate's 15%, we'll say I save $650 on my federal return. Great. Okay. That income gets added back in, or that expense rather gets added back in on my Nebraska return. And I effectively will get that amount of money back. And so what they're allowing us to do is take a federal tax deduction for state taxes paid. So if, I used 15%, if your rate was 32%, it'd be 32% of 5,000. And so depending on your income, if, for example, my taxable income for Nebraska was 100,000, I'd save $6,840. I would pay $6,840 in. I would save 15% on the $6,840, and then effectively I would end up getting a credit for my Nebraska taxes of that $6,840 and get it back. And so it's going to be a great savings. However, we need to do something before the end of the year. Okay, so that's part one. Part two is even more fun and complicated. So they made this law retroactive to 2018. And so it's a form that we fill out with the IRS saying we want to retroactively make this election for 2018. So then we figure out what your Nebraska taxable income was for those years. We pay 6.84 or 8%, similar to that, on those taxes. And so if I had 100,000 in income for those 5 years, I'm paying $6,800 some dollars in per year. So that'd be like $34,000. So I pay the state of Nebraska $34,000. I then on my federal taxes get that $34,000 deduction, which maybe saves me, we'll say 20%, saves me $6,000 on federal. That 30-some thousand I paid in shows up on my Nebraska return and gets effectively refunded to me back out, except there's going to be a timing difference. So this is a new law in Nebraska. It may be delayed. We might not get that refund back till September. It may not be the exact amount depending on what our taxes are, et cetera, but it's going to basically allow Money Smarts, the entity, to pay Russ, the owner's state income taxes and give Russ, the owner, a credit on his personal taxes. But the big thing is it allows us the deduction on our federal tax return. And so we've chosen you because we believe you might have the available cash to make this payment, and because it's going to be a savings for you. This is a very, very brief explanation of how it works. That's kind of the gist of how it works. But we're sending this to you because we think you might be a good candidate. certainly let us know if it's something you want to do. We'll probably follow these up with phone calls to talk to you a little bit more about it. The state put out a video here a little while back, and I've watched a couple other firms' videos to confirm we have our brain wrapped around exactly how this works. So it's kind of money in to get money back out, but to get a federal tax savings. And that's how it works. Then going forward, we would make that election year to year. And so it might mean Money Smarts has to pay estimated state taxes because we owed taxes in 23. I might have to make estimates in 24, 24, which are again going to be a deduction on my federal personal return. And it's going to show I already have that personally paid in when it rolls through the business. So a little bit tricky. If you need more explanation, certainly give us a call. And that's the new rule to help with pass-through entity tax, so we don't lose out on that deduction. Thank you for listening, and we're here if you'd like to do this.